This is the story of how one man, Sam Bankman-Fried, lost $10 billion inside of 24 hours. This is an incredible story. If you don't know who Sam Bankman-Fried is, he was the CEO of one of the largest cryptocurrency exchanges in the world called FTX. As of now, he probably still is the CEO, but that may not be for much longer. This is an incredible and a crazy story. So I'm going to go break all of this down for you. What's basically happened in the past 24 hours and how in the world did he lose over $10 billion? Right here, Miles Duchester has a great thread on Twitter. I'm following him. I encourage you to follow Miles as well, but he breaks this down. He says Sam Bankman-Fried was once admired as a king of crypto. By the way, as evidenced by the fact that somebody put together an hour-long documentary that's over a year old. It was uploaded a year ago, and this documentary put him in incredible positive light. It was essentially an interview/puff piece for him and his ego. Everybody saw him as a true crypto entrepreneur success story. In fact, very few had been more successful unless they were the early guys mining Bitcoin that never sold. I mean, you rise from obscurity to a net worth of almost $14 billion or over $14 billion, then you've accomplished something extraordinary. Now, Alameda and FTX are rumored to be on the brink of insolvency. Spoiler alert, they were insolvent. Here's how it all went down for Sam Bankman-Fried and FTX. For a long time, Sam Bankman-Fried was idolized in the space, famous for his arbitrage trading. By the way, he didn't just do arbitrage trading. This guy he basically had a small team of people. What he did was incredible. He had a small team of people. They were literally taking he found there was a significant trade difference on some Chinese exchanges and some US exchanges in the price of Bitcoin. But the reason you couldn't easily take advantage of those is because you had to be a Chinese citizen to have the Chinese account, and in order to be a Chinese citizen, you had to have a Chinese bank account. So he literally hopped on a plane, went to China, found people open up accounts for him. They started wiring dollars to China, and in China, they would use those dollars, convert them to the Chinese currency, the local currency, open up accounts for banks, open up exchange account, buy Bitcoin, send the Bitcoin to the U.S. In the U.S., they would sell the Bitcoin on the U.S. exchange for dollars, make a profit, and repeat that process all over again. It took several weeks to put that entire thing in place, and it was pretty ingenious. You have to give the guy credit for being ambitious and being a problem solver. He also was known for founding FTX and Alameda Research Group and his highly successful investments in companies or projects like Solana. Sam accrued an impressive estimated net worth of $10 to $14.5 billion at his peak. In recent times, as in the past couple of months or so, in recent times, FTX has been extremely busy leading huge fundraising rounds for new projects. Aptos and Sui are two of the most recent examples. Ironically enough, a lot of people said, hey, these are great projects because we have really successful, really big companies like Alameda Research who are also investing in these projects. So the Alameda Research name was oftentimes used as a point of credibility as these new projects were trying to launch and raise funds for themselves. Sam was invincible. Despite Luna causing chaos, he used the situation as leverage to continue an aggressive expansion plan. So a lot of companies fell when Luna collapsed. A lot of companies were invested in the cryptocurrency Luna, and they were over-leveraged or overexposed, however you want to say it. When it collapsed a lot of other people's balance sheets. And Sam Bankman-Fried came in. He bailed out BlockFi for $240 million. He bid for Voyager's assets and considered bailing out Celsius. Now, these are the headlines, obviously, that back that up. But what was very interesting, he also criticized other successful crypto entrepreneurs for not coming in to do the same. And again, this really did a lot for his positive white knight crypto image at the time. However, in the background, there were some cracks starting to appear. Eyebrows started to raise when Alameda CEO Sam Trabucco suddenly resigned. And this is a tweet where he announced his resignation. Additionally, a month later, FTX president Brett Harrison stepped down. Okay, what's very interesting is when both of these guys step down, in hindsight, it becomes a little bit more obvious. But at the time, most people, myself included, thought maybe it's a coincidence. You know, it's not a big deal. Changing of the guard, maybe there's some sort of philosophical differences, because you have to understand, in the U.S., they are seen as kind of the gold standard. The FTX brand is really, really strong because they're really pro with regulations, and you know you can feel like your money's going to be safe there, and it's But looking back, these two resignations should have been a much bigger red flag at the time. These resignations occurred just before it was revealed that FTX was facing some legal trouble in the form of a security regulator probe. SBF has a clear interest in politics, evidenced by his involvement in the upcoming midterm elections, in which he donated almost $50 million. Take a look at this. This guy right here, the largest donors, George Soros is number one, not shocking. But if you come down, Sam Bankman-Fried, 1, 2, 3, 4, 5, the fifth largest donor in midterm elections. This is insane. And at the time, by the way, it appeared like it could be positive because you feel like you've got somebody in the crypto space who's going to be highly influential for the crypto industry. And you thought he would be an advocate for the true crypto ethos, permissionless, decentralized access to a financial system, or even the unbanked could get access to a digital financial system and send value around the world in a permissionless, trustless blockchain fashion. So that's how a lot of people, they thought this is probably going to be pretty good in the long run. This comes after his plan to donate $1 billion in the 2024 U.S. presidential election, which he later backtracked on. Clearly, Sam has political interest at heart. $1 billion he had committed in one interview that he was going to basically donate in the U.S. presidential race in 2024. He's not going to do that now. Spoiler. Although public sentiment was becoming more negative towards Sam, the DCCPA draft bill marked a real turning point for the public perception. A draft of the bill was first leaked online. So this is the bill that, at its core, the most fundamental thing that it did that was troubling was it forced KYC AML on decentralized finance. And Sam Bankman-Fried said that he thought this was a good thing. Sam has seemingly been supportive of the bill, but despite Sam trying to play the good guy on Twitter, there were clear red flags throughout the bill that would pose significant threats to DeFi. Eric Voorhees, this is incredible. Eric Voorhees famously quizzed Sam Bankman-Fried on his stance during a Bankless interview. This clip, which went viral, led to continued skepticism among the crypto community. And this is the moment here where you realize something's wrong with this guy. Something's up. He's not who he claims to be.
Chief, that did mean that,
let's watch this carefully. By the way, for the record, Eric Voorhees is the CEO of Shapeshift. He obviously is operating a business. He obviously has to deal with compliance and regulatory issues, but he is a CEO who at his core believes in the true ethos of what cryptocurrency was designed to do. I mean, he's a guy that a lot of people thought early on, a lot of people thought maybe Sam Bankman-Fried was basically built the same way and truly believed in what cryptocurrency could do for the average person long term. This interview right here shows, without question, Sam Bankman-Fried was out for himself and he was out for his own profit motive. Listen to how Eric Voorhees backs him into a corner.
Chief, that did mean that, essentially a suit front trends by targeting American retail had to be licensed. I think that could be reasonable.
If the question was, let's acknowledge that the email protocol will be permissionless as a protocol.
Yep.
But it was the law of the land in America that every email front-end provider required KYC from its users.
Yep.
Because under the justification that we do not want people sending information back and forth with terrorists.
Yep.
Where would you stand on that position?
So this is where he backs him into a corner. This is a setup, ladies and gentlemen. Right here, Eric Voorhees is making a comparison. You want regulations to come into the cryptocurrency space and decentralized finance. But let's do another example. Instead of finance, let's look at email. What if they required KYC for everyone you send and receive email from? Would you be for that? Sam Bankman-Fried gives an answer, and Eric Voorhees basically, in this interview, gives a quick checkmate in return.
Oh, I'd be strongly against that position.
Why?
Why would I be against it? Because I think it'd be against freedom of speech. I think it'd be disenfranchising a lot of people. I think I would not trust in practice that it would do a good job. So I agree with you on all of that.
Okay.
Point, he said, I believe that in practice it wouldn't do a good job. I think that's also true for the financial regulations. Let's keep going.
I'm making a distinction here between, for instance, payments versus derivative contracts.
Why is Aave somehow different than email?
So Why is it different than email?
You argued so well and so passionately
Yeah,
to not block email with
yeah,
licensing and KYC. I loved hearing that.
yep,
That filled my soul with joy. Such good
yeah,
arguments. Why does
yeah.
that not apply to financial transactions?
Checkmate.
So,
Checkmate.
um,
Checkmate.
why does it not apply to financial transactions?
Can't answer.
Um, I think there are a few things here. So, first of all,
He waffled and waffled and waffled. The public damage for Sam, Miles continues, the public damage for Sam was immense. The sentiment shifted as people realized his intentions may be different from what was first thought, myself included. This shift in sentiment was the precursor for what came next, and a major contributor behind the severity of the recent FUD. Concerns started to bubble on Wednesday when Almeida's balance sheet was leaked. It revealed the net equity in the Almeida business is actually FTX owned, centrally controlled, and printed out of thin air token. This guy did a great job breaking down some of the concerns surrounding the balance sheet, but essentially the balance sheet was not liquid. Then more rumors started proliferating, and the FUD machine entered full force. Allegations of FTX's insolvency started circulating. Then we saw a massive 584 million worth of FTT transferred to Binance. CZ confirmed that it was, in fact, Binance who executed the trade. We got full confirmation that Binance was exiting its FTT position yesterday when CZ announced his decision to liquidate any remaining FTX on its books. CZ fired shots at Sam, stating that they were selling as a result of learning from Luna. CZ indirectly references Sam's lobbying by claiming that he won't support people who lobby against other industry players behind their back. FTX primary token FTT dumped as a result, dumping 15% of its weekly highs. However, it found strong support around the $22 region. Caroline, the CEO of Almeida Research Group, was forced to issue a response to CZ's sale. In my opinion, this response felt desperate and was somewhat of a red flag. We all know what happened the last time someone tried to steady the ship. At CZ Binance, if you're looking to minimize the market impact on your FTT sales, Almeida will happily buy it all from you today at $22. FTT isn't the only worry, though. Almeida holds many more tokens which could be subjected to downside pressure if the situation worsens, which of course it did. Here's a list of a lot of the tokens. Many of them, the prices have collapsed. The FUD surrounding FTX has resulted in staggering outflows as people rush to withdraw. The threat of a bank run was looming yesterday as some people were forced to wait 4 hours to process withdrawals. Sam recently issued a response stating that FTX is fine and assets are fine. Of course, that tweet has now been deleted. However, I'm treating the situation with caution, as when there's smoke, there's often fire. The chances of FTX being insolvent are quite slim, but why take chances in crypto when there's viable alternatives? I hope you found this thread interesting, he said, like and retweet. So spoiler alert, Binance continued to dump. FTX ended up selling. They signed a letter of intent based upon due diligence. And this was all when FTX claimed that they had the funds. Sam Bankman-Fried himself said there was plenty of liquidity there. He said himself that all customers' funds were backed up, that they didn't use customer funds for anything. They didn't even invest in U.S. treasuries. Obviously, that's proven to most likely be false. This is an incredible story, and I just want to recap real quick. I shared this in my video about regulators. CFTC and Democrats were palling around with Sam Bankman-Fried, suing DAOs, devs, and decrying the Scrooge of DeFi. By the way, it's not just Democrats. And plotting to regulate websites and wallets, wallet APIs. When we're talking about regulating website and wallet APIs, this is talking about the KYC for wallets. While FTX was playing with customer money, meaning he didn't have that money set aside, it wasn't segregated, he didn't have enough money available to cover customer withdrawals. Madoff and Enron were fully SEC regulated. Regulators do not protect us, period, ladies and gentlemen. Regulators are only looking out for their wealthy donors, of which Sam Bankman-Fried was one of them. Here we have it, the biggest fall in fortune ever. 30-year-old crypto CEO loses billionaire status overnight. FTX CEO Sam Bankman-Fried lost his billionaire status overnight as his personal wealth plummeted 94%. So what can the small investor take away from this? Simple. Stay diversified. Manage risk. All the large companies, Three Arrows Capital, Luna, Celsius, Voyager, all these companies, including FTX, went under because of poor risk management. Manage your risk, diversify. Crypto's an incredible industry. Cryptocurrency is going to be here for a long time. It will eventually transform the world, but you can't be over invested in any one area, including the crypto industry, because it's a crazy, crazy market. I got a feeling we haven't heard the last from this young man. Stay tuned. I'll keep you posted on the future of Sam Bankman-Fried. Thank you so much for watching. Ladies and gentlemen, true decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.